Good morning, ladies and gentlemen. Thanks, everyone, for being here today. My name is Peter Benke, Director of Corporate Development at Gold Royalty Corp. Gold Royalty is a precious metals-focused royalty and streaming company listed on the NYSE under the ticker GROY. I will be making some forward-looking statements today, so please review our disclaimer available on our website. So, Gold Royalty, as we enter 2025, this is really a pivotal year for us as a company. Over our 4-year history, we've acquired over 200 assets, starting with a portfolio of 18 royalties in 2021 to now over 240 today. And right now is the key cash flow inflection point as several of our key assets are ramping up and entering production. In 2024, we saw our key assets, Côté, going to be Canada's third largest gold mine, and the VRIC mine in Europe, enter production. In 2025, we expect to benefit from a full year of production from these assets. We also see our royalty over the Borborema mine enter production later this quarter, which will be another driver of our cash flow growth this year. Despite this cash flow growth in our portfolio, Gold Royalty is one of the lowest valued royalty and streaming companies on a net asset value basis. So we see significant upside as this cash flow is delivered quarter over quarter. Speaking more of the portfolio, I mentioned 3 key assets, VRIC, Côté, Borborema, but with 240 royalties, we have other gems across the portfolio that represent tremendous value. We currently have 80% of our 240 plus assets in 3 of the best mining jurisdictions in the world, Quebec, Ontario, and Nevada. So a very safe jurisdictional profile for you as investors. Our cornerstone assets, the key assets that drive our valuation, are on some of the largest gold mines in North America. Our cornerstone asset is a 3% NSR royalty over the Canadian Malartic mine in Quebec. I mentioned the Côté royalty already, going to be Canada's third largest gold mine. And then we also hold a royalty over Barrick and Newmont's joint venture in Nevada Gold Mines over the Carlin Complex. So one of the largest gold mining complexes in the USA and actually globally. This rapid growth over the last 4 years is really a testament to our management team and board, who together bring over 400 years of collective experience. Led by our chairman and CEO, David Garofalo, as well as co-founder Amir Adnani, we don't just bring the expertise to evaluate new opportunities, understand the technical merits. We have the access and the connectivity across the industry to identify opportunities many of our peers may not even be aware of. So I'll briefly touch on our growth strategy, our track record, how we've gone from 18 royalties to over 240 royalties today. And we've done this through 4 distinct pillars of growth. The first, royalty financing, writing new royalties, providing funding to develop new assets, and we did this in late 2023 with the Borborema transaction. Our second pillar, third-party acquisitions, acquiring existing royalties, as we did with Côté and VRIC, to help the holders of those assets monetize their positions. Third, corporate M&A, consolidating the smaller cap end of the royalty and streaming sector. We started this in 2021 through the acquisition of Ely Gold Royalties, Abitibi Royalties, and Golden Valley Mines and Royalties. And since then, we've seen over a dozen other royalty and streaming companies be consolidated within the space. We see significant room for more consolidation and the potential G&A synergies that come along with that. But as of right now, with our currency, we've been more disciplined in this regard. And then finally, and more unique to Gold Royalty as a company, is our royalty generator model. We have a team in Reno, Nevada that generates new royalties by staking land claims around existing deposits, finding operating partners, and then vending those assets out, where we retain a royalty on the back end. This effectively creates royalties at no cost, and we've created over 60 royalties in our portfolio through this way. So I mentioned our attractive valuation. Despite this pivotal free cash flow growth that we see this year, despite this growth strategy and track record, we are currently trading at a price to net asset value of around 0.4 times net asset value on consensus estimates. When you compare this to the large caps or even smaller cap peers, you can see the significant value potential and attractive entry point that Gold Royalty represents right now for investors. And why do we think the stock is going to re-rate in the relatively near term? I mentioned multiple times, 2025 is that key inflection point. We're coming off a relatively modest base in 2023 of around 2,500 GEOs, And as we approach the end of the decade, given our cornerstone flagship assets ramping up production, we could see our GEO profile ramp up towards 30,000 GEOs. Importantly, as a royalty and streaming company, this growth in our GEO, our production profile, and our revenue comes at no cost. All of our assets are fully bought and paid for. We simply take a percentage of revenue, and we are fully insulated from cost inflation, CapEx blowouts, or other issues that could benign typical producers. We're also well diversified with multiple cash flowing assets, which further reduces risk. We have a very lean team, only 10 members in management, fixed operating costs of approximately $8 million a year. So as this revenue is delivered over the coming years, you'll expect to see those costs fix and our free cash flow grow year over year. So what is driving this revenue growth? I mentioned our pipeline, some of the flagship assets, but this provides an overview of the pipeline we have within our portfolio. 7 cash flowing assets currently, over a dozen at various stages of development, and then a long tail of optionality in advanced and exploration stage assets. If you look at this slide, a few things should really jump out at you. Lots of Canadian and US flags, a very safe jurisdictional profile relative to many peers. The other key point is our key operating partners are likely names many of you are familiar with: Newmont, VRIC, Agnico Eagle. These are the companies that have the expertise, but importantly, the balance sheets to unlock the full potential of the underlying assets, ultimately to the benefit of Gold Royalty. That pipeline I showed on the previous slide, that's a dynamic slide. We're going to see our exploration assets or development stage assets move from one side of the slide towards production over time. And we're confident in this because of the amount of investment that our operating partners are putting into our portfolios. Over the last 4 years, we've seen an average of over 550,000 meters of drilling being conducted across our portfolio. That's the equivalent of over $200 million a year being spent by our operating partners into the assets where we hold royalties at zero cost to Gold Royalty as the royalty and streaming holder. This will result in resource growth in coming years, de-risking of these assets, and moving them along that pipeline towards production to fuel those 7 existing cash flowing assets we have today. So looking at the shareholder register and given this strong portfolio we've assembled over the last 4 years, the track record of our management team and board, we've been able to attract some key strategic and institutional investors. Our largest shareholder, Gold Mining Inc., is our parent company, and our second largest shareholder is VRIC, the second largest gold producer in the world, where we acquired a portfolio of assets from them. Beyond them, some other strategic shareholders we have include Taurus and Queens Road Capital, who have provided capital to the company in the past, and then other major institutions in the space, such as BMO Asset Management, Commodity Capital, and we are in the GDXJ through the VANAC ETF. Insiders hold approximately 6%, but as mentioned, that Gold Mining Inc. position is around 12%, so close to 20% control. Briefly touching on capital structure and the balance sheet, about 169 million shares outstanding for our market cap, just over US 200 million. As mentioned previously, we are just listed in the US on the NYSE, ticker GROY. Cash, just under $3 million, but we do have 10 million on our credit facility, and we are generating free cash flow, so we'll look to bolster the balance sheet over the coming quarters. Fairly widespread research coverage, 5 analysts covering us currently, so you can get an independent view of net asset value, price targets, and their views on what are the key catalysts for the company going forward as well by obtaining that research. So in summary, 2025, major inflection point for Gold Royalty, going from a break-even point 2 years ago to strong free cash flow generation as those assets ramp up through 2025. A very attractive entry point looking at really any multiple basis, but primarily price to net asset value. Flagship assets in very safe jurisdictions with multiple decades of revenue ahead of them, and a proven management team to be disciplined and conservative stewards of your capital as shareholders. So thank you very much for your time. As mentioned, booth 626. Hope to see some of you there if there's any follow-up questions. Thank you.